This is Nightly Business Report with Tyler Matheson and Sue Herrera.
New week, new highs. The major indexes hit records as the Senate passes a measure to reopen the government.
Streaming surge. Netflix keeps growing, adding millions of more subscribers, and the stock hits an all-time high. Its market cap hits $100 billion for the first time ever in late-day trading.
Magic number. Retirement account balances are at an all-time high, but have you reached your goals? And what's your next best step? Those stories and more tonight on Nightly Business Report for Monday, January 22nd.
Good evening, everyone. Well, the rally keeps on going and going and going. Stocks sprinted into the closing bell, rising to new highs after Senate leaders said they reached a deal to end the federal government shutdown. Late today, the Senate passed the measure that funds the government through February 8th. An upbeat report on global economic growth also helped equities power higher. And as one strategist put it, there's a lot to feel good about, things like tax cuts and global growth and rising sentiment. So the final numbers, the Dow Jones Industrial Average advanced 142 points to 26,214. The Nasdaq added 71 and the S&P 500 was up 22.
Well, as stocks climbed today, so did bond yields. And remember that bond prices move inversely with yields. In fact, the yield on the 10-year Treasury climbed to a 3-year high today, and that is garnering a lot of attention from investors. Mike Santoli explains.
Could rising bond yields be the thing that halts the seemingly unstoppable stock market rally? This is now the big question on Wall Street after the 10-year Treasury yield rose above 2.6% this month and approaches a 4-year high. Whether bond yields will spell trouble for stocks depends on several variables. How far will yields rise, if indeed they keep rising at all? For years, Wall Street has predicted the 10-year Treasury would hit 3%, and that level hasn't been seen since early 2014. How fast is any further climb in yields? Stocks tend to get spooked when the bond market gets too jumpy, implying more uncertainty about the market outlook. And why yields are rising is also a crucial factor in whether stocks can handle such a move. Strategists are taking comfort from the fact that bond yields are working higher from historically low levels on signs of accelerating economic growth and with corporate earnings climbing in support of stocks. It's worth noting that the last time the 10-year Treasury surged to 3% in 2013, stocks had one of their best years of this bull market. If Treasury yields were now to shoot well above 3% in a frenzy that upset the corporate bond market, or mostly on fears of accelerating inflation, then perhaps it would finally touch off the kind of sharp setback in the soaring stock market that has been avoided since mid-2016. There is no doubt some level of bond yields that would begin to pressure stock values, but it's impossible to know in advance, and at least for the moment, doesn't seem all that close. For Nightly Business Report, I'm Mike Santoli.
A big winner late today was Netflix, as its big investment in original content continues to pay off. The company saw a surge in subscriber growth, blowing past growth targets for the fourth quarter. Earnings came in at 41 cents a share. That was in line with estimates. Revenue soared 32% from a year earlier to more than $3 billion. And investors liked what they saw, sending the stock to all-time highs and its market cap to the $100 billion mark for the first time ever. Julia Borston has more on the Netflix quarter.
Netflix's commitment to content is paying off, driving stronger than expected subscriber additions. 8.3 million in the fourth quarter. That's the most in Netflix's history and about 2 million more than analysts had expected. The company saying that growth was fueled by its content slate, including the return of The Crown, Black Mirror, and Stranger Things. Netflix also saying that its largest investment in original film yet, Bright, starring Will Smith, was a major success and drove a notable lift in acquisition. This is particularly striking considering that this film was panned by critics. And Netflix is planning to keep ramping up its investment in content to further grow its user base, saying it expects to add 6.35 million subscribers in the first quarter. That's higher than expected, as are the company's guidance for first quarter revenue and earnings. The company is saying it'll spend between $7.5 billion and $8 billion on content this year to keep growing that subscriber base and keep them hooked. For Nightly Business Report, I'm Julia Borston in Los Angeles.
2017 marked the biggest year ever for ETFs, which are low-cost funds that trade minute by minute like stocks, but are diversified like mutual funds. They're more popular than ever before. They've got a record $3 trillion in assets under management now, and new industry trends were a hot topic at one of the largest gatherings of investment advisors in the world. Bob Pisani is in Hollywood, Florida tonight.
2,500 investment professionals descended on Hollywood, Florida to hear the latest investment advice. The keynote speaker, Vanguard's brand new CEO, Tim Buckley, emphasized that the revolution around low-cost ETFs indexed to products like the S&P 500 was going to continue and that fees would keep coming down.
The reason why active is underperforming is fees are too high. It's a very competitive business. It's tough to find excess return in a zero-sum game. You have to lower fees so more people have a chance of outperforming.
That's good news for investors, but there are worries on the horizon. The head of the New York Stock Exchange warned that one of the threats to the stock market rally was a trade war.
It'll be mostly about trade. What could go wrong with trade? Not just Brexit, but what could go wrong between the U.S. and China, or the U.S. and other countries in North America, and what's to come in the year or two ahead.
Finally, Bitcoin was a constant topic. The SEC has essentially said they will not be approving a Bitcoin ETF anytime soon, but Jan van Eck, who runs one of the firms applying for a Bitcoin futures-based ETF, said he still thought the SEC's concerns could be addressed.
Well, I think the SEC is taking a very thoughtful approach and trying to think about this, which is an entirely new asset, right? It's software. So people are trading sort of access to software-developed rights, and they're identifying all the key issues in the marketplace, and we as an issuer have to engage with them to try to address these issues.
But neither Bitcoin nor fee wars nor trade wars dampen the enthusiasm of this crowd. Investors have been pouring money into low-cost ETFs of all stripes, and the investment professionals here expect that trend to continue. For Nightly Business Report, I'm Bob Pisani in Hollywood, Florida.
The retail broker TD Ameritrade is rolling out round-the-clock trading hours for ETFs. The company says investors can now buy and sell shares 24 hours a day, 5 days a week on its platform. Here to discuss why TD is making this move and what it means for you is JJ Kinahan, Chief Market Strategist at TD Ameritrade. Hi, JJ. Good to see you.
Hey, Sue. Always a pleasure to be here.
Let's start with why you decided to do this. Are there fundamental events that you think, when they occur in the overnight trading hours, perhaps put some investors at a disadvantage?
Yes, you know, you look at what happened in the last year, Sue, where we had Brexit, we had the presidential election. These were opportunities for people, which if you're a futures trader, you can take advantage of, but if you're not a futures trader, you really couldn't. So we looked at it and we said, you know, why wouldn't we give this opportunity to people who are qualified to do so that they could trade these events overnight? Or one of the big things we found, Sue, is on our metrics measuring how our clients do their research and in conversations with our clients, 70% of our client research is done while the market's closed. Why wouldn't we give people an opportunity to act on what they're researching?
So ETFs feels to me, JJ, like step one. Is step two the ability eventually to trade individual stocks?
Well, you know, a lot of it's going to, the nice thing about the ETFs we rolled out right now, Tyler, is that the market makers, and you always need market makers in the market, they can hedge these pretty easily because they're all very much related to futures products that are currently trading, or, you know, markets that are open at that time in the emerging markets, et cetera. So that makes a big difference. Now, who knows, at some point, to your point, that may make sense that we do individual equities, and we've certainly taken a look at it. But again, you want to roll it out, you want it to be successful, and the most important thing is that there's liquidity. We feel there will be great liquidity in these markets. We rolled it out last night, and we saw really nice liquidity in every product that we have.
How much of the trading action do you think is also going to stem from the Asian markets? Because with the time change and the reversal there, they're at a disadvantage. They have to trade during our market hours, not their market hours.
I think you hit on something incredibly important, Sue, and one of the reasons we did it. You know, we have a Singapore offering now. We're rolling out our Hong Kong offering, so clients there trading the U.S. markets, exactly that. They're sleeping when our markets are open. And the other thing I think that all of us have learned from Bitcoin is the great influence of Asian investors in that product, well, why wouldn't we want to put them in products that are theoretically not as speculative as Bitcoin and allow people to actually do some investing rather than just speculating on price movement?
All right, best of luck with the new program. We appreciate your coming on, JJ.
Thanks for having me, guys.
JJ Kinahan with TD Ameritrade. Now, separately, TD Ameritrade did report its quarterly results late today. The company beat both earnings and revenue estimates and raised its profit guidance to reflect the benefits from the recent tax law.
In Washington, as we reported, senators reached a deal to end the government shutdown. Both parties agreed to a short-term funding bill to keep the government open through February 8th. As of this evening, the House has enough votes to pass the measure, but there's still a lot of hard work left to do. Kayla Tausche's on Capitol Hill.
Lawmakers have bought themselves less than 3 weeks to reach broad agreements on a host of issues that have eluded Congress before. First on the list, immigration. A promise of a path forward to protect so-called dreamers is what sold Democrats today.
The Republican leader and I have come to an arrangement. We will vote today to reopen the government, to continue negotiating a global agreement, with the commitment that if an agreement isn't reached by February the 8th, the Senate will immediately proceed to consideration of legislation dealing with DACA. The process will be neutral and fair to all sides.
The White House consulted a half dozen GOP senators for what they thought could pass on a bipartisan basis, even as House Republicans are balking at the new February 8th timeline. Congress will also have to reach an agreement on a budget so they can stop doing these short-term spending bills. They'll also be looking at a health care replacement, with tax reform having repealed a core tenet of Obamacare. But one thing will be different on February 8th. This bill included two sweeteners. For Democrats, the extension of children's health insurance for 6 years. For Republicans, the delay of certain Obamacare taxes. Those won't be around next time, and leadership will be scrambling to find new ones. For Nightly Business Report, I'm Kayla Tausche in Washington.
Changes to the U.S. tax code are expected to benefit the global economy. According to the latest forecast of the International Monetary Fund, world output will grow nearly 4% this year and next. That is the strongest rate since 2011. The organization says the tax cuts will likely increase investment in the world's largest economy and help its biggest trading partners. Still ahead, how much do you need to retire? It's a question everybody is asking.
If you are thinking of retiring, you might want to delay it by a few months. A new study shows that working an additional 3 to 6 months could raise your standard of living after retirement. Working longer increases two sources of income: Social Security and those 401k balances. The longer a person works, the longer Social Security is deferred, which means a higher benefit. And 401k withdrawals will also be higher from more money in that account.
Convincing yourself to work a few more months may be especially hard to do right now, and that's because the market rally has propelled retirement savings accounts to record highs. So how do you know if it's finally time? Joining us now is Sharon Epperson. It's always great to see you, Sharon.
It's good to be here.
So what's behind people and their thinking when they're about to reach their retirement goals?
Well, they're looking at their numbers, and the average IRA balance, for instance, according to Fidelity, is over $100,000. It hit that six-figure mark for the first time ever last year, and they're continuing to grow. So many people are very comfortable with what they're making there in their IRA, and their 401k balance is close to $100,000 on average as well. So we've seen the market gains. We've also seen a contribution rate increase, particularly for people putting their money in their 401k, that is also helping their balances rise.
What should people do if they think they have hit their retirement number, that magic, mythical number where you think, oh, I got it made in the shade?
Yeah, well, for a lot of people, 100,000, that's going to probably not be enough. Yeah. But some of the things that they need to think about is what they want to do in retirement, and plan out that retirement budget, and make sure you include the fun stuff you want to do, like traveling, the activities that you may not be able to do now while you're working. Also think about your life expectancy and How do you plan for that? How do you know how long that's going to be? Well, there's some calculators out there that can help you, but know that healthcare costs are rising, and that's going to be a significant part of what your costs are in retirement. And then you got to really decide what you want to do with your money in retirement. Do you want to still save some of it, or do you want to spend it all, or you want to give some of it away? So you need to have a plan there. This is a time to review where you are.
Do you make changes to how your money is invested? If you've decided, okay, I've got X number of dollars, I can retire, but do you change your balance or your asset allocation at all?
So as you're reviewing what your goals are, you also probably may need to rebalance and reallocate where your investments are held. And so if you were thinking that 65% in equities was great, now you're at 70% because of the market, you may want to take some of that off the table. And if you're selling stock or stock funds, the best place to do it is in your IRA or your 401k, those tax-advantaged accounts, because you want to consider the tax impact. And what people don't understand or forget to keep in mind is the importance of having cash on hand for those short-term expenses. Maybe 20% of your portfolio, some financial advisors say, you just might want to have that in cash, so you're ready for that. And others have talked about considering an annuity. That, of course, can be a complicated investment, so you may want to talk to a professional before getting into that.
Absolutely, yeah.
All right. Sharon, thanks.
Sure.
As always, great to see you. Sharon Epperson. Well, Abercrombie & Fitch raises its outlook, and that is where we begin tonight's market focus. The clothing retailer said strong performance across all its brands during the holiday period prompted the company to hike its fourth quarter sales outlook. Abercrombie now expects same-store sales to grow in the high single digits. Initial guidance was that revenue growth would be in the low single digits. Shares popped 12%, $22.43. Who said retail's dead? All right, higher commodity prices helped oil giant Halliburton report better than expected profits and revenue. The oil services company said the results were helped by improved revenue in the U.S. and overseas. Halliburton also said it is optimistic about the health of the U.S. oil business. Halliburton shares up 6% to $56.40. And Wynn Resorts said strong performance at its two Macau casinos helped overall earnings and revenue grow. Both numbers topped expectations. Shares of Wynn Resorts jumped more than 8%, finishing the day at $195.23.
The insurance giant AIG is buying property and casualty reinsurer Validus for just under $6 billion. AIG said the deal would expand its reach in the reinsurance market and also add to earnings. AIG shares fell fractionally to $61 even. The healthcare company Array BioPharma said it saw promising results from its study that tested the effectiveness of 3 medications in treating colorectal cancer. Array said the triple combination treatment resulted in an unprecedented progression-free survival and response rate. Shares of Array took off, rising 18% to $15.56. French drug maker Sanofi is buying hemophilia specialist Bioverativ for more than $11 billion as it looks to expand its drug portfolio for rare diseases. Some analysts expressed valuation concerns about Sanofi's largest deal in 7 years, and that pressured Sanofi shares. They fell 3% to $43.20. Meanwhile, Bioverativ shares soared. They were up nearly 62% to $103.79. And Celgene is also making moves to grow its portfolio. The drug maker said it has agreed to buy Juno Therapeutics for about $9 billion, a deal that gives Celgene access to gene therapy cancer treatments. Shares of Celgene were up a fraction to $102.91. Juno shares climbed more than 26% to $86 even.
Well, towns and cities across the country are getting hit and hard by the flu, but some big companies are doing what they can to fight back. Meg Terrell looks at the big business behind the big illness.
I wasn't able to walk or do nothing.
Flu is widespread in 49 states and Puerto Rico in a season that's shaping up to be more severe than usual. But while flu brings misery to those suffering from it, for some segments of the healthcare industry, flu season brings healthy returns. Hospitals and urgent care clinics see an uptick during severe flu seasons, while lab testing firms and makers of diagnostic tests also get a boost. The same goes for pharmacies as customers visit for medications, flu shots, and supplies. And finally, makers of flu vaccines are expected to see a boost as public health officials encourage everyone to get their flu shot.
Get vaccinated. And if you haven't been vaccinated yet, run and do it. And make a New Year's resolution to get vaccinated again this fall and bring the whole family with you.
The market for flu vaccines is dominated by three major players: Sanofi Pasteur, Australian biotech company CSL, and GlaxoSmithKline. And the recommendation to get a shot stands even as the vaccine is thought to be less effective this year at protecting against the flu, primarily because of the more difficult strain in circulation. But it's not all a boon to the healthcare industry. Health insurers often take a hit in more severe seasons as they pay for more care. And employers could also see a loss in productivity from sick days.
We're predicting about 11 million Americans will fall ill over the flu season, and that's going to cost employers over $9 billion in wages being paid to employees that are staying home sick.
Despite that cost, HR experts and public health officials say encouraging employees to stay home when sick is beneficial for both stopping the spread of flu and avoiding even more lost productivity. Showing up for work when sick even has a name: presenteeism. And many of us do it, even though we know we shouldn't. In a survey last year by urgent care provider CityMD, almost 70% of responders said they'd gone to the drugstore or pharmacy when they had flu-like symptoms. 43% went to the grocery store, and almost 40% had gone to work sick. Experts recommend employers take a few steps to help reduce the spread and the potential cost of flu, discouraging presenteeism through enabling telecommuting and through flexible sick leave policies. This can be a particular challenge for hourly workers. And for those in office settings, holding fewer in-person meetings. And of course, encouraging lots of hand washing and covering coughs and sneezes. For Nightly Business Report, I'm Meg Terrell.
Coming up, no cashiers, no lines, no registers. Welcome to Amazon's store of the future. The U.S. regulator that oversees auditors is at the center of a scandal tonight. 3 former employees are accused of leaking inside information to KPMG so it could improve its results. The Public Company Accounting Oversight Board was meant to restore public confidence in the audit profession after Enron and that WorldCom scandal. Also charged were 3 KPMG employees with conspiring to defraud government regulators. They face criminal and civil charges.
The largest oil refinery on the East Coast has filed for bankruptcy. Philadelphia Energy Solutions is blaming the skyrocketing cost of complying with environmental rules. New regulations are aimed at lowering pollution. The company has also been hurt by shrinking margins and regulation.
The global inequality gap is widening. Most of the wealth generated last year went to the world's richest 1%. According to a new report from Oxfam, the poorest half of all people in the world saw no increase in wealth at all. Oxfam cites a number of reasons for the disparity, including tax evasion, the erosion of workers' rights, and businesses' influence on policy decisions. The report comes as business leaders and heads of state gather in Davos at the World Economic Forum.
The company that helped move shopping online is now trying to get people back into physical stores. Today, Amazon opened a convenience store to the public, but this one is different. As Deirdre Bosa reports from Seattle, it's high-tech, requiring an app and a scan just to get in.
Paul Fan heard about Amazon Go, the first automated grocery store that promises no lines, no checkouts, and no cashiers in late 2016. So when it finally opened today, after nearly a year's delay, he was one of the first customers.
There's no checkout line. But it feels weird, because when I put the stuff into my own bag or into my pockets, it's just a different habit, compared to the traditional way you shop and people will see what item you took.
As an industrial analyst, he was less interested in the milk, eggs, and meal kits on offer and more in the technology. Technology that lets customers walk in, pick up whatever they want from the shelves, and simply walk out.
It's really smart because when I took some items, I put it back to the different places, and I thought maybe the system will go wrong, but eventually it knows what I took.
Amazon is using computer sensors and machine learning to track everything you pick up or put back in a virtual shopping cart and charges you when you walk out. Your receipt is sent in an email just a few minutes later.
Now, we weren't trying to cheat the system, but when I went shopping this morning, I picked up 6 items, but I was only charged for 5. This Siggi's yogurt wasn't tracked, and I didn't end up paying for it, even though the system is supposed to record everything I picked up in a virtual basket.
It may raise questions about the technology, the very thing that makes the store so groundbreaking. The opening was delayed by nearly a year, reportedly due to glitches. The Amazon executive behind the project says there haven't been any technological issues and that my experience was a rare occurrence.
First and foremost, enjoy the yogurt on us. You know, interestingly enough, that happens so rarely, we didn't even bother building in a feature for customers to tell us that it happened. So thanks for being honest and telling us. I've been doing this a year and I have yet to get an error.
She also says there are no immediate plans to roll out more Amazon Go stores or implement the technology in its nearly 500 Whole Foods stores, the grocery chain that Amazon acquired last year. But an eventual expansion could be a game changer for the grocery and retail industry. It eliminates one of the most painful parts of the shopping experience, the line and checkout. And today's first customers were intrigued and pleasantly surprised.
Popped in, popped out. Maybe the whole process took maybe 3.5 minutes.
This is the first day to open, so very exciting that we can just come in to work out with the food or whatever we want to buy.
Some of the snacks that I see them making outside is really cool because they have this really open kitchen concept.
The store could have big implications for millions of cashier jobs in America, though Amazon still has a team of what it calls associates who greet, stock shelves, and prepare meals.
But for Amazon to further disrupt the retail industry, the technology has to prove that it works, and customers will have to take to a technologically advanced retail experience. For Nightly Business Report, I'm Deirdre Boza, Seattle.
And before we go, here's another look at the record set on Wall Street. The Dow advanced 142, NASDAQ added 71, the S&P 500 was up 22.
And that's it for us tonight. I'm Sue Herrera. Thanks for joining us.
And thanks for me as well. I'm Tyler Mathisen. Have a great evening, everybody. We'll see you here tomorrow.